Hey, Renee.
Hey Amy, how are you?
I am doing good. What about you?
Oh, doing great, doing great. Thank you.
It's not like it's been forever since we've been on here, hasn't it?
It has, but time flies when you're having fun, huh?
Yeah. I had to take a little break because, like I made on that other announcement, I was studying for a broker exam and I passed that last week.
Yay, congrats.
Before. Thank you. Thank you. So now that I've passed that and I don't have to study anymore, I'm like, okay, let me get back to making our Friday things here.
That's right.
All right. So, for those who are joining us, thank you so much for taking time. I'm Amy Brown. I'm a realtor with Next Generation Real Estate Group. And then this is Renee Lambert. She is a lender with Guild Mortgage. And so, we're here to talk today about Guild's down payment assistance programs. They've got two or three things going on that's pretty exciting. And so I'm going to pull up a slide and kind of turn it over to Renee to start telling us about some of these new things that they've got going on.
All right, thank you. So Guild has, well, we have a couple of down payment assistance programs. We offer the Alabama Housing Step Up program, which we'll discuss in a few minutes. But right now, I'm going to talk about our newest down payment assistance product that Guild offers. As you can see on the screen, it's 100%. It's a first mortgage conventional. This is not FHA. This one
Conventional?
is. Can you do what?
Conventional? Wow.
Yeah. Oh, yeah. I'm sorry. I didn't hear you. Yes, it is conventional. And it's got several benefits that Alabama Housing doesn't have, and then Alabama Housing has benefits this one doesn't have. So it just depends on each situation as to which one better suits our clients. But yes, it is a first mortgage it's a 97% first mortgage. Okay. The second mortgage is a 4%, meaning 3% is the down payment that you would normally pay out of pocket. The other 1% can go toward closing costs and prepaids or whatever, so it covers that. Okay. The second mortgage is a 30-year interest only. Okay.
Mm-hmm.
So your payment's going to be lower on that second than it is on Alabama Housing. But the
Okay.
key, yes, the key is on this particular program. Again, you can pay interest on it forever, but at some point it comes due in full, whether you sell
Mm-hmm.
or refinance or make payments for 30 years. And at the end of that
Okay.
30 years, it's going to come due. So it doesn't go away. It doesn't have to be
Mm-hmm.
repaid, but it just gives you the opportunity to make that lower payment. And in some
Mm-hmm.
cases right now, that's what people need,
Right.
so
So this
that
isn't technically free money. This is interest only on that second mortgage.
correct, which
You're
makes
saying.
that second mortgage payment lower than if
Mhm.
you were paying a fully amortized payment like you do on the other program.
And
So,
that 1%, that's great that can go towards
mhm,
closing costs. Because let's say someone's buying a $200,000 house, so then they would get that'd be 2,000 that they could put
most
towards it.
definitely. Yes,
Yeah,
that's
that
a
can
very
definitely
huge benefit. Good
mhm,
benefit, definitely. As you can see, that since it's conventional, of course, it does require the 660 credit score,
mhm,
but our program allows you to go up to 50% debt to income ratio. Alabama Housing is 45%. So a
mhm,
lot of times people need that extra 5% to get to where they're happy, to
right,
find the kind of house they're looking for, So that is definitely a benefit for this program as well. There's no manual underwriting. We have to get a system approval. We have to run our manual our system underwriting. And if we get an approval, we're good to go. We just cannot do it manual.
okay,
The qualifying income limits, as you'll see, is
mhm.
140% over the AMI. Okay. And that equals to roughly about $90,000. So the income
That
limits are
varies
pretty
by
high.
county, doesn't it? The average, median income, that varies by county, doesn't it?
Correct. Yes. Yes.
Mhm,
It does.
okay,
So as I said, that's a few benefits of that particular program. That is not, you can't do manufactured on that program. It's
okay,
strictly site built homes. Now, Alabama Housing, on the other hand, you can do manufactured homes. So you can do a
okay,
double, you can, yes. And I mean, I've done a few of those, it works out really well. I mean, clearly,
mhm,
because, it's a second mortgage financing your down payment, just like our program, but their
mhm,
this loan is FHA. Step Up has FHA and conventional. and VA actually. So you have a first mortgage for 96.5%, which is normal for your FHA. Then you have a second lien for 4%. 3.5% is your down payment. The other 0.5% goes towards closing cost. So you do have a little bit there, okay? Then, so on this particular program, 640 is the minimum score. These guidelines come from Alabama Housing, so they do not make any exceptions to the credit score, on either program actually. Again, there's no manual underwriting, but on this program, the qualifying income limit's $130,000. So a lot more people will fall into that category. But again, if they need a 50% debt ratio, then that's when Renee would be like, okay, well, we're going to run this one and let you compare the two and see what best fits your needs. And like I said, each of them have their benefits, but the conventional Alabama housing product, excellent loan as well. It's a 97% first, just like our program, 4% second mortgage, like ours. The difference being is the second mortgage on Alabama housing is an amortized fixed loan for a 10-year, a 10-year amortized loan. So your payment is going to be a little higher, because it's amortized to be paid out at the end of 10 years. So, and as you can see, like I said, each has its different benefits. And that's why it's so important that, when we do our applications, we really try to dig deep and understand everything about our client, what their needs are, what their goals are, and that kind of points us.
No one size fits all.
Oh, definitely not. Definitely not. And
I get random questions sometimes asking, what would the interest rate be for this? Like, I don't know. I need you to talk to a lender because that's her expertise. I will help you find the house that you qualify for.
That's right.
The lender can tell you how much you qualify for and what your payment's going to be. Because there's too many different variables in this.
That's why we have to work so well together, and
I know, right?
We do. So
absolutely.
And on Alabama housing, there's a difference I was going to mention. Okay, so Alabama housing dictates their own interest rates. Guild does not. So we look at Alabama housing's websites every day, and that is what your rate is. But you cannot lock your interest rate on Alabama housing until your loan has been through underwriting and been approved. So we have to look that day and see what the rate is, and that's the rate you lock in at. In order to lock into Alabama housing, the buyer has to wire 0.5% of their loan amount directly to Alabama housing, and Alabama housing then locks in their rate for them. Okay. So there's a lag time that, of course, the interest rate could change. Well, on our program, it's instantaneous. So if I've got you approved and you bring me a contract today, I can lock you in on whatever the rate is right now. So that's also a little difference there that can make a difference, because the rate could go up a lot, in those probably 2-week time span before we get an approval. So, and I make sure, like I said, when I'm talking to clients about them, I tell them that I show them, this is the pros, this is the cons. This fits your needs better, but this one is, so I show them so that we can make a decision and figure out which one is the best for them.
Absolutely. And that's what I like about you, because you remember when I was refinancing my house and I wanted to look at like 100 different ways to pick out which term and points and such as that I wanted to go with, because I wanted to see what we could afford and what would work best. Yeah. And that's what a good lender should be willing to do, those type of things, because it's, like I said, you can't just ask a question. I make this money, my credit score on Credit Karma says it's this.
That's exactly right. Right.
I didn't mention this earlier, but someone asked me, is there a way that they can check their actual FICO score that y'all use?
Honestly, no. I mean, they can run a FICO score report, I think, online. But the difference when you pull your own credit for your personal use, it's different when a lender is pulling your credit to lend you money.
Mhm.
So you're going to see differences no matter what. I just tell people, general rule of thumb with Credit Karma is
Mhm.
when we pull our true FICO scores that we pull, you're going to see usually a 20 to 40 points difference. Our scores will be lower than what you see on there, usually
Right.
by 20 to 40 points. I have had occasions where they're the same or better. It's rare,
Mhm.
but that's kind of the general rule of thumb that I tell my clients. Now once you see it get here on Credit
Mhm.
Karma, call me. I can do a soft credit pull
Mhm.
before I do a hard pull and say, hey, we're not quite there yet, but do this or keep doing what you're doing. And we'll just
Mhm.
do those soft pulls until we are ready and we know it's where we need it to be.
That's very good to know because I know that I've talked to people before that were worried about having that hard pull show
Mm-hmm.
up on their credit.
Yep.
And so to know that you can do a soft pull and tell them what they need to work on, if
Mm-hmm.
anything, that's definitely great and very reassuring to them. So I'll definitely be passing that along.
Awesome.
Yeah.
Yeah, I do it
The
every
main
day.
thing is
We do it
getting
every
them.
day.
Yeah. I really try to get people to talk to you so that you can go over their situation, you go over their income and everything, the whole big picture
Yes, ma'am. That's
to figure
exactly
out what they can afford to buy, especially when, I've seen memes on Facebook or people saying things about,
right.
my rent's 900 a month, 1,200 a month, 1,500 a month, but I can't get a mortgage.
Right.
And
Yes.
I
And
feel for them, um, this time, whether you're ready to buy now or you do need a year or two, this time is going to pass by, whether you work on your credit or work on your income, if you're waiting on a raise, different things like that. That time's going to go by anyway. So
that's
you
right.
might as well, if you really, really want to own a house, you
Mm-hmm.
really want to kick that landlord to the curb, or you
That's
really
right.
need to move up a house, perhaps, your household size is growing or something like that, and
Mm-hmm.
you're going to have to purchase a more expensive house. Like I said, the time's going to pass anyways. Why
Mm-hmm.
not go ahead and talk to you, find out what they need to do, and get on that plan. Make a plan.
Exactly.
It's
I
years.
typically do that and email the plan in writing,
Mhm.
step by step, and I also remind them roughly how much money they need to have saved. Not to have a lot of inquiries on your credit. Don't go buy a car. I
Mhm.
literally give them a plan for however long I think that it will take for them to do what's needed to be done so that they
Mhm.
know everything, not just to get that credit score there. So because
Mhm.
people don't know. And I told a lady the other day something I saw, I think it was on Facebook, and it said, you're always going to be making a house payment, but it's up to you to determine if it's your house that you
Yes.
own or somebody else's house.
Bingo.
So, yes, so I'm like, face it, it can be fixed. Let's do it.
Mhm.
And I'm willing to put in the work if they are. I love doing that.
Mhm.
I just love that part of my job, and especially
Mhm.
for those people who are determined and that will follow the plan, and do what's needed to be done, whether it's 6 weeks, 6 months, or 3 years, it doesn't matter.
Mhm.
So I'm definitely willing to do that. And I do it, honestly, we all do it here every day. So,
Exactly.
yeah. We,
Exactly.
and I will tell you, both of those programs we just discussed there's no manual underwriting. And what
Mhm.
manual underwriting is if we run it through our desktop underwriter system and we do not get an approval for in many reasons, it could be somebody that might be in chapter 13
Mhm.
or just got out of chapter 13 or just different reasons we would not get an approval based on our experience and what we know about our products and our underwriters and just painting that really pretty picture. We will take a file and we will get every piece of documentation just as if they've bought a home and are going through the process. We get that, we put it all together with a letter of explanation for whatever their challenges were, and we send it up to underwriting, and it goes through
Mhm.
the full process, verifying employment, income, assets, everything. And it
Mhm.
does take a few weeks because it goes through the entire process. But at the end of that, if we have an approval, you can go out and get a house right then. Like you're ready to go. You're approved. We do that. Guild does that a lot. We have numerous of
Mhm.
those that we submit weekly. And it's just comforting to know that we're not just saying, oh, you'll be fine, and just wait and see if something comes up in underwriting. We like to head
Oh
on and
gosh.
face all problems up front and get them resolved, because it's life. Everybody's had challenges. Everybody's had issues, but that doesn't mean they don't deserve a home. So
Right.
Guild, like I said, our underwriters are very open. And as long as we put our file together properly and fill in all the gaps and explain everything to a T and document, most of the time it's going to be approved, you know. So I think that's a pretty big deal. And we do go down to a 580 credit score, and we do that every day. I mean, so
You need a more substantial down payment, though, I'm assuming, right?
Right. Down payment assistance, you've got to have at least the 640.
Yeah. But going down to a 580 credit score, you definitely need some savings.
Yes, the 3.5% down payment, and then of course your closing cost. So you definitely do, and that's why I tell people up front, this is roughly what you're going to need. Worst case scenario, start saving now. So by the time you have your credit fixed within 12 months, you've got your money saved and you're literally ready to go. So.
And at the time of this recording, we are not at a buyer's market yet.
No.
Yes, maybe a softer market. This is pre-pandemic typical situations. So we're still seeing, there's not enough inventory, so there's more buyers than there are sellers. You don't see a buyer's market unless you've got way more houses for sale than there are buyers. And I think somebody was on TV recently saying we were in or headed towards a buyer's market, but we're not there.
No, we've got a minute to go. We'll get there, I think, but it's going to take time. But that's what I tell people, just go ahead and prepare for the worst. And then if it flips on us and the seller will pay your cost, then you've got a good savings to move into your new house.
Yes, so. Exactly. And you never know. You never know.
You're right.
What about this other program we were talking about? You ready to?
Yes, most definitely.
I know I did it earlier by mistake.
I'm sorry. Yeah, I forgot to discuss it earlier. I'm sorry. But yes, this is the Housing Finance Authority Advantage Affordable Income Subsidy Grant that goes hand in hand with the Step Up program. Okay. The conventional Step Up program. And if you'll see here, depending on the income, because again, it is based on the AMI. So if you are below 50% of Freddie Mac's median income, you get 1%. And this is not repayable money. This is a true grant. It does not have to be repaid. You can use it towards your closing costs, your prepaids, whatever you need it for. And it is, as I said, it's determined by income as to what amount you get. So as you below that, 50 basis points.
What would about 50% of the AMI be?
Freddie Mac's AMI at 50% would probably be about 35-ish, I believe. Because the Freddie Mac's AMI is a little bit different. It's kind of odd, but it's a little bit different, and it's county by county also. So I'd have to look specifically to give you exact numbers at each county. And then again, you can see if you are above 50% up to 80, you still can get a 0.5%, which on a $200,000, you're still talking about a good little chunk of money, which is free money, to help you with your cost. So there's so many different things they're trying to come up with to help people in this unusual market that we have here now. And this is one of those, and it's an excellent program. And if you fit into this category, the money is yours at closing, and it goes toward whatever you want it to.
That's fantastic. That is fantastic. That would definitely be a help, especially for that particular income bracket, because it's harder when you're just starting out in life, or if you're at an entry-level position or something like that, and you don't quite have that income yet, but yet you can still be able to buy a house. You don't have to rent. That would
exactly. And that's exactly why they've done that. And I love it. Every little thing that they can come up with to help people in that category is, every little bit helps. Whether it's $100 or $800 or whatever it is, every little bit helps to help them purchase
Absolutely.
a home.
Absolutely. Well, Renee, why don't we wrap this up because we're about 20 minutes in,
Okay.
and it's hard to go over everything
It is.
in a webinar. So we just want to give everybody just little chunks of information. And if you do have more questions, there on the ticker scrolling across the bottom of the screen is my phone number. And if definitely reach out to Renee for starting that process, get a pre-approval, let her know who you're working with, preferably me.
Yeah, that's
Or my
right.
husband.
We work excellent together, don't we, Amy?
Yes, we do. Yes, we do. Oh gosh, so it was great talking to you again, Renee. So we'll be
You
trying to
too.
think about what our next one's going to be.
All right, we'll do it.
If
Thank you
anybody's got
so
any
much.
questions or suggestions about any topic that you'd like for us to talk more about, comment below or just reach out to us either way.
Most
We're always
definitely.
looking for ideas.
That's right, always.
All right, everybody, have a fantastic Friday. Talk to
You
y'all next
too. Thanks,
Friday.
Amy. All right.
Bye.
Bye-bye.